Hello, this is Sahur. I'm here with you to have a short outlook on the global economic outlook in the week ahead, week number 19. Before going forward and check the week ahead, let's first of all check the last week. What we had in the last week, we had a very busy week in the global economy. Before checking the economic data, I have to mention that the tensions in the last week they eased a little bit, but somehow in the Middle East as well as Ukraine. But for the week ahead, we have some tensions. These tensions probably can increase as Netanyahu treated to attack to the Rafah. If their peace talk doesn't go in the way they want. However, on the other hand, we had an earnings report. More than 80% of the S&P 500 list, they already published their earnings reports. And as we know, more than 77% of them could beat the estimates and actual numbers. They were better than market estimates. This beating rate, is much above the 10-year average beating rate in the S&P 500 global earning reports. So on the economic data front, we had a central bank meeting. Federal Reserve had a meeting last week, and this meeting was the main event of the week last week, where they decided to hold the interest rates unchanged. This is what the market also widely has been expecting, but the important point is that Mr. Powell in the press conference denied any possibility of interest rate hike in 2024 and mentioned that mentioned that we will need a rate cut in the year ahead. So the Michelle Bowman or other Fed members that in the recent weeks have been talking about the possibility of rate hike in 2024. This is also with this comment from the Federal Reserve. Those comments can be ignored. On the other hand, the last day of the week, in the last day on Friday, we had NFP numbers. As you know, U.S. economy could only add 175,000 new jobs in April, which means the unemployment level increased from 3.8% to 3.9% with 62.7% unemployment rate, while that means that the labor market is easing a little bit. This is what we could see in the GLT numbers and GLT numbers on Wednesday as well. However, the important point is its average earnings, which increased only 0.2% in April, which is much lower than estimates, and it decreased the annual rate also to 3.9% from 4.1% that we had in the last week. On Europe, we had inflation numbers in Europe also. Inflation data in Europe showed that they were at 2.4%. If I don't mistake, inflation numbers at 2.4. Yeah, inflation. We had European inflation numbers. As we found it. However, the inflation numbers were not, 2.4% for headline numbers, and core CPI or core inflation decreased to 2.7%, lower than 2.9% when we saw in March. This data says that the economic inflation in the Eurozone is decreasing. However, overall GDP numbers and manufacturing data that we had last week from the Eurozone and Eurozone countries confirmed that the Eurozone economy is slowly increasing, while on the other hand, in China, the worries increased and the data, they were not as much as fine as it was expected. PMI numbers, they were a little bit better than estimates. However, they were much lower than months ago. For the week ahead, we will have a very light week in the US. Almost there is no important data. However, we have too many speeches from the Federal Reserve. We will have the Fed members. They will speak. As you know, the silence time ended with the meeting that we had last week. So in the week ahead, after 10 days silence mode, they will talk too much this week, and they will explain. They will have too many speeches that they will explain about the Federal Reserve economic outlook, in their interest rates, decisions, stuff like that. But besides that, we don't have that much information from there. However, in the US, this on the earning front as well, I have to mention that we don't have that much earning data. More than 80% of companies, they already publish their data. So less than 20% we have, and those 20%, they are not that much important companies. We have some retails, retail shops that they have to publish their earnings. They are important, but overall data, overall, we don't have that much important and market mover reports in the week ahead. So in the US, we will have a very light week, which means that the US dollar can regain some of its losses that it had on a Friday, because the data that we had on Friday, it was not that much surprise. So yeah, we lost the market estimates, but it was not big numbers, big miss. So I don't think that they can change the market sentiments, and not just for the US dollar, it can be same for S&P 500 as well. On other countries, on the other side, on other areas, we have too many central banks meetings this week. On Tuesday, we have an RBA meeting, which is expected to hold the interest rates at 4.35%. Inflation increased in the recent months in last 2 months in Australia, while economic data also, they were a little bit better than estimates, especially in the labor market. So the 4.35% rate can be remain unchanged. On Thursday, we have 3 central banks meeting. In Brazil, the central bank is expected to hold the rates at 10.75% after 6 months of 6 meetings that they have been decreasing the rates. We shouldn't forget that the inflation in the Brazil also started to show some warnings. And then later in UK, we will have again BOE meeting. The BOE also, we expect to hold the interest rate at 5.25% unchanged. Interest rates decrease in the UK, but still this is way above the central bank target. It's more than 4%, while the central bank is targeting 2%. So we have too much to do in UK to bring the inflation down, so central bank can hold the rates. We should not forget that the economic data that we had in recent months also, they have been showing that economy in the UK is slowly progressing. So we don't have that much worry to hold the rates for now at 5.25%. But in Mexico, the Bank of Mexico is the only central bank this week that we expect to see the rate cut. They have been holding the rates for 6 or 7 months. But the last month they decided to cut the rate by 25 BPS. This month also we expect to see the central bank in Mexico to cut the rates by another 25%. So to bring down the interest, the target rates from 11% to 10.75%. On Friday, we shouldn't forget that the day after the BOE, we'll have a meeting. On Friday, we'll have a GDP numbers from the UK. These GDP numbers must be watched closely as we are expected to see another progress. So besides that, on top of that, we shouldn't forget that we have to remind that the Canadian labor market data, which is important. Why it's important? Because the Canadian Central Bank BOC will be check this number. The members will check this number to decide about the next meeting that they have. Probably with the better than estimated labor market data, we can expect that the Canadian Central Bank also to be another bank to cut the rates in its next meeting. On the energy front, this week we know that the last week data published, they showed that like a big or large increase in the U.S. Inventories, petroleum inventories. For the week ahead, market will focus on Tuesday's EIA short. Yeah, on Tuesday, it should be on Tuesday, right? Yeah, short-term energy outlook on Tuesday, as well as the Chinese economic data. As I mentioned, the Chinese data last week, they showed that economy is slowing a little bit in China, which increased the pressure on the oil price. But for this week, we will have the Chinese import and export and trade data on Thursday, and then on Saturday, if I don't mistake, we will have a Chinese. Yeah, on Saturday we will have a Chinese inflation numbers. Inflation is one of the biggest problem and the biggest headache for the Chinese central bank and the government. Inflation was decreasing in recent months so badly under 0%. It was 0.1%, minus 0.5% even. But now we can see that in March it's increased a little bit, and we expect to see a little bit more increase in April. Probably inflation numbers could be 0 or 0.1%, which can help the energy market. I mean, if you can see the progress in Chinese inflation numbers, it can be read. It could be read as a positive data from China and help the energy market, especially the oil price. Let's go on the chart, see what we have on the chart. Where is our chart? Here the chart. Here we go. So if we check the chart, this is the oil chart as we see here. Oil price has been decreasing in the recent weeks, but as I mentioned, because one of the reasons was because of the lower or less tensions. However, $78 is a very critical number, as you can see, very critical level here. Tensions decrease, but we cannot say that there is no more tension in the Middle East or in Ukraine. So, which means, especially we know that the Ukrainian targeting the U.S. refineries in the recent weeks, which means it can increase the pressure on the oil price and oil energy market as well. However, with a little bit positive data we expect from the China, the increasing tensions again in the Middle East, especially in Gaza, we expect the oil price to recover from these levels, targeting about $80 and then $84. On the US dollar front, if you go, as I mentioned, in the US, we will have a very short, in the US, we will have a very light week in the US. We don't have that much data. We have only too many speeches from the FOMC members that they can explain the Federal Reserve outlook on the economy. Probably we will have more hawkish comments than dovish, which means the US dollar can hold this overall soft bullish trend. That means that the stock market, especially if we look at the S&P 500, the stock market also, with the too many encouraging that it got from the earning reports as well as the Friday's NFP numbers, could recover a little bit, but still the overall soft downtrend didn't change yet, and we expect with the less earnings report that we have in the week ahead, as well as the hawkish expected speeches from the FOMC members, we can say that the overall bearish trend can continue, and downtrend still there for now. On the gold, if we check the gold chart, as we expect to see a little bit lower in the lower numbers on the US bond yields, and a little bit pressure on the stock markets, we expect the gold price to start recovering. Gold, I should mention that the US dollar decreased a little bit last week. We don't expect to see too much increase in the week ahead. So that means also a little bit support from gold price. So overall uptrend in the gold is not something we can say it's not possible. We can give more credit to the bullish trend for the week ahead in the gold chart than the bearish. On the other front, if we go and check the cryptocurrency target markets, we know we had ETFs, the new ETFs in Hong Kong last week, but still the after holding, the prices in the cryptocurrency market, it started to get some pressure. The holding, so if you go, let me bring it to the daily chart of the This is a daily chart. If we check at the daily chart of if we check the daily chart of Bitcoin, we can see that the pressure that started after halving still continues on the prices, because it was already priced in. This event have been priced in the market, so halving couldn't change the attentions and others in the market. So this pressure on the prices started. Even this new ETFs couldn't change the market sentiment. For now, the trend is a downtrend in the cryptocurrency market, especially in the BTC chart, and we expect to see this downtrend to continue a little bit, unless if the price comes above $67,000. Breaching under 62K, which is here almost. Breaching under 62K can put the 54 and then 52K, 59 and then 52K $. This is the overall market and estimates that we had from the market. Let's check once again. Economy calendar. If we don't have any other data, now there is no other data. I can say that it was important, and I forget just on the in China, in Japan. I have to say that the Japanese data, especially householding spending, on Friday, they are very important. Japanese yen, that it has been moving on in the, let's check the chart. Japanese yen has been moved to its 30, almost 4 or 5 years low. Yep, on Monday. However, we know that the central bank and the government is started to inject some cash in the market, which helped the Japanese yen against US dollar and other currencies. We expect to see this downtrend in the USD/JPY to continue forward in the week ahead. This is what we had in the last week, and our expectations from the week ahead. If you had any other question, please write down under this video on YouTube or Instagram. I will try to get back to your question as soon as it's possible. Have a good week, and bye-bye.